Hey, what's up everyone? Happy 2022! So let me start this video with this screenshot. Since IPO, Pool Corp is up 64,000%. They have this one slide where they say if you invested $100,000, it would have turned into $72.5 million. And in the last 10 years alone, Pool Corp is up 17x. And so I became completely obsessed in trying to figure out how they've been able to do this, because it's truly remarkable what they've done. And I wanted to take the lessons learned from this case study and basically find the next Pool Corp. And so what I did was I poured over 10 years worth of their financials, their press releases, and their conference calls. And I've condensed everything that I've learned into 7 key points that I'll share with you. So with that, let's take a deep dive into Pool Corp. Before I get into the details, let's have a look at their financials from a very super high level, so that we kind of know what we're looking at. And when you think about a stock that's up 17x, would it really surprise you to find out that their sales have only tripled in the last decade? It really surprised me to see this. And that's good news, right? It means you don't need super high growth. I mean, their sales have only increased 11% year over year. And so what this means is you don't need to find the next Amazon. What you need is a company with the ability to expand their profit margins. And when you couple that with share buybacks, it really juices up your earnings per share. And that's really what we care about as investors, is earnings per share. And so that's really the power of share buybacks, and not diluting your share count. And so share price appreciation is then a multivariable equation, right? You can't just look at sales growth in isolation. It's all the other metrics have to kind of go your way. And if it goes against you, then this doesn't work. Okay, so Pool Corp, what do they do and how are they so freaking amazing? Well, they have 2 business segments: pool supply distribution and landscape irrigation distribution. And the lion's share of their business is pools. So let's just focus on that. The landscape business or the irrigation business has very similar characteristics as the pools. And it's got, just a much further runway to grow. In terms of their products and categories, a big percentage of their sales are repairs and maintenance. And this is recurring every year. Because when you have a pool, right, you have to maintain it. You have to skim it, you have to brush it, your pool pump has to work because you need to circulate the water, you have to filter it, you have to put chlorine in it. And if you don't do any of that, then the pool turns into a swamp. You could kind of think of their business like Netflix, right? Every pool owner is a potential subscriber of their product. And the subscription is very sticky, because if you own a pool, you gotta buy their products. And every single year, they're building more and more pools. And so your subscriber base is actually growing every year. The pool supplies industry is highly fragmented. And Pool Corp is the dominant player and the consolidator in their space. And so they started with 1 store in South Louisiana. And every single year, they've been able to open up new sales centers. They acquire their competitors. And so year over year, they've just been feeding the pool monster. Until now, they're basically so big that they're unstoppable. They carry over 200,000 branded products. And they serve 80,000 customers year over year and growing. They don't sell to retail like you and me, but they sell to retail stores, to home builders, to pool maintenance contractors, and pool builders. And so, just think about the advantages of being the biggest kid on the block with the most resources, right? Every time they phone in a inventory order, they're gonna get the best price. And they're gonna get the best price discounts because they order in such big volume. So no one's gonna be able to outcompete them in terms of price. And then they have these giant warehouses so that they always have product available. And so when a pool contractor, calls up one of their competitors and asks, hey, do you have this variable speed pump? And their competitor says, no, sorry, we're out, but Pool Corp has it. They just gained a customer. And I would even argue that they just gained market share. And so with the product offering, they also offer training. They offer good instruction. They offer delivery because they have the best logistics. And just with all of that, they just slowly, over time, take market share away from everyone. And they can expand super fast because they're a capital light business. Every year, Pool Corp spends about 2% of sales to reinvest back into their business. And so just for comparison, Disneyland is another great business, but they have to spend about 20% of their sales back as a reinvestment into their business. And then Pool Corp also earns a very high return on investment. For every store location that Pool Corp opens, they earn about a 30% pre-tax return by around year 4. Now, I think they're able to earn such high returns year over year because they have monopolistic behaviors. And of course, they don't come out and say that, but it's generally a good sign as an investor when on their financials, they're actually being sued for being a monopoly. Not good as a customer, but as an investor it is. So just as an example, in 2017, when everyone thought Amazon was going to take over the world, the pool equipment manufacturers all came out and said, we're going to ban the sale of pool equipment online. And of course, they claimed that the reason for doing that was because pool owners would buy the pool equipment themselves, and then they would, install the equipment themselves, but then they would do it wrong. And it caused such a bog down in their customer service and technical support that they decided, you know what, this is a trade-only product. And so from now on, only people in the trade are able to buy and sell these pool equipments. And then in August of 2020, a company called BioLab, which produces trichloral, it is a pool sanitizing agent, basically. One of their plants went on fire, and trichloral became in very short supply. And so the CEO, Pete Arvin, on a conference call, pretty much said, well, if we don't have the product, you're pretty much not going to find it from anywhere else. And basically what he's trying to say is, we are the dominant player. We buy more than everyone. If we don't have it, chances are you're out of luck. And again, I think that's an indication that they really absorb all the inventory in the industry. And they're the biggest player. And so go to them if you want to find a product, because if they're out, pretty much everyone else is out of luck also. What makes Pool Corp such a home run is their ability to expand profit margins, over time. It's really interesting when you think about their business and get to know it, because the repair and maintenance side of their business, those products actually sell for a higher margin. They're generally lower ticket items, and so they have higher margins. Pool construction material are big ticket items. They sell for way more, but they're lower margin. And the repair and maintenance side of their business is the stable and recurring and growing part of their business. And that part of their business is just getting bigger and bigger and bigger over time. So Pool Corp has this natural ability to have stable margins as they grow. And then on top of that, they've also created private label products. They have their own branding products, and those products have very high margins. Private labels just have very high margins. And I think back in 2011, private labels were 15% of their sales. And in 2020 and 2021, private labels have now become 25% of their sales. And they also have evolved over time in how they serve their customers, right? So they created an app called Pool 360. It allows their customers to pretty much place orders on their job site. And as you place orders online, it lessens the number of order errors. And then that shortens the time and makes their personnel more efficient. They also created another app called Blue Streak. And you could think of Blue Streak as a self-checkout in one of their warehouses. So contractors would place their order with Pool 360. They would go to their warehouse, they self-pick up their items, they use Blue Streak, and they do a self-checkout. And that order process and pickup and payment process is so efficient that it uses less and less of their employees' time. And they have done so many other things, right, in what they call their capacity creation initiatives. And so over time, you can see that it's really, really starting to work, right? Their net profit margins and their operating margins have really started to increase in the last couple of years. And I think this is kind of a structural change in their business, and I don't think it's temporary. So when you place a good business like Pool Corp in the hands of great management, you just end up with phenomenal results, right? So Manny was a very good CEO and a very good operator. And Mark was an excellent CFO and a very good capital allocator. And I say was because they've, retired since then. Pete Arvin has now succeeded as CEO. He's come from an operations background. And in just the last couple of years, he's done a very stellar job also. You can see the share price appreciation in just the last couple of years. So here's one example. All the way back in 2011, on their conference call, they were talking about their incremental sales margin being at around 20%. What that essentially means, and it took me a while to figure this out, is that for every incremental dollar of sales that they're making more than the prior year, they're getting a 20% operating margin on it. So all the way back in 2011, the CEO was already advertising to us that over time, their operating margins would approach 20%. And if you look at their profit margin graph, it shouldn't be a surprise to us that their operating margins are now approaching 20%. And you really have to know your business, and you really have to know your metrics and be a good operator to be able to lay out that groundwork and then actually execute and make it happen over time. So just to summarize, Pool Corp has many characteristics of an exceptional business. They are not a hyper-growth company, but they have all the right financial metrics. They have growing recurring sales. They're a dominant consolidator in a highly fragmented industry. They have a capital light business, but high return on investment. they exhibit monopolistic behaviors, they have the ability to expand margins over time, and they're in the hands and the stewardship of great management team. And when you think about all of that coupled together, they have all the right ingredients, and that's really the secret sauce. So I'm hoping that we can take all the lessons learned here and go out and try to find the next Pool Corp. So I hope you learned something, and I learned a lot just through this exercise. And so I hope that you got something out of it. With that, I hope you a great new year, and I'll see you in the next video. Thank you.